Welcome to this 2026 Market Outlook video. In this video, we'll discuss three key themes as we head into the new year. The most important context is that for the sixth time in the last 7 years, the stock market has delivered double-digit returns. This remarkable streak has left many investors in a positive financial position. This has happened despite concerns over tariffs, the government shutdown, AI trends, and more. Some of these stories have shifted in the past year, while others could continue into next year. There will also be new narratives to consider, such as the upcoming midterm election, ongoing uncertainty in Washington, a changing of the guard at the Fed, high valuations across the stock market, and more. The challenge for long-term investors isn't predicting which events will matter, but maintaining perspective and discipline across all market conditions. We'll discuss a few of these topics over the next several minutes. Let's start by looking at how different asset classes are performing. Importantly for investors, many asset classes are contributing to portfolio returns as we near 2026. This is in contrast to much of the past decade when U.S. stocks outperformed the rest of the world. In 2025, international stocks have outpaced U.S. markets, with developed market stocks and emerging market stocks each gaining around 30% in U.S. dollar terms. This has been driven by two key factors: improving growth expectations in many economies, and the weakening dollar, which boosts returns for US-based investors. Fixed income is also playing an important stabilizing role in portfolios. The Bloomberg US Aggregate Bond Index has gained 7% for the year as the Federal Reserve continues cutting interest rates and inflation stabilizes. This underscores the importance of balance and diversification. While it may be tempting to make sudden portfolio changes based on headlines, investors who stay on track with their financial plans are likely to be rewarded in 2026 and beyond. Now, let's turn to market sectors and what's driving returns. Perhaps no single trend has captured investor attention more than artificial intelligence. Capital expenditures on AI infrastructure reached extraordinary levels in 2025. Surveys suggest that businesses are increasingly adopting AI into their workflows. For investors, AI presents both upside potential and downside risk. The Magnificent Seven technology companies continue to lead markets higher, driven by infrastructure investments and growing adoption of AI tools. However, this concentration creates vulnerability. These companies now represent about 1/3 of the S&P 500, meaning most investors have substantial exposure whether they realize it or not. History shows that transformative technologies often follow similar patterns: initial skepticism, rapid adoption, market enthusiasm, and eventual integration into the broader economy. The key lesson is that markets often overestimate the speed at which profits can be generated. This trend will likely continue in the new year. Finally, let's look at the economic environment and the Federal Reserve's role. Economic growth trends have decelerated, but remain stronger than many had feared. U.S. GDP experienced a slightly negative dip in the first quarter of 2025, but this rebounded quickly. Inflation has stabilized around 3%, but the job market has weakened. For the Federal Reserve, they resumed cutting rates in September to support the economy after pausing earlier this year. As we enter 2026, the path of monetary policy could become less certain. One reason is that Fed Chair Jerome Powell's term will end on May 15, 2026, paving the way for new leadership at the Fed. It's expected that the administration will nominate a new chair that supports lower interest rates. The chart here shows that the economy has performed well across Fed chairs appointed by both parties. So, as we enter 2026, investors face a familiar challenge: balancing concerns with the reality that markets have consistently rewarded patient, disciplined investors over time. Rather than attempting to time the market based on a single concern, focus on maintaining balanced portfolios positioned for various outcomes. We hope you found these insights helpful. If you would like to discuss the outlook for 2026 in greater detail, please don't hesitate to reach out. We look forward to speaking with you.